29 December 2024, Sunday, guys. This could be the last two videos for the year itself. And I want to tell you a lot of things today because I am pretty sure that US stock market might likely be continuing its downside recently because the 10-year yields, bond yields have already reached a very critical level and funds may be moving out from the US stocks. So this is going to be a very important video. Please continue watching it. Meanwhile, itself, please make sure you do your own disclaimer effect on your portfolio. Yeah. All right, first of all, the stock market has down again. All right, last Friday, we saw the Dow Jones down 300 points, but overall, because of the recovery, it broke the 3 weeks losing streak. But the question is this, will this continue next week? Well, there's a lot of noise at the moment right now, talking about the tariffs and the concern of the productivity. And of course, we all know that the recent rally, it could be the Santa Claus rally that usually happened for the last 5 days of the year and the first two in January. So overall, since 1950, the S&P is up by 1.3% during this period of time. So with what is happening right now, we need about 1% upside. But then again, the collective sign of relief is navigating through a conscientious election cycle and the unusual market dynamic to end 2024. So with all this information, what I'm trying to say is that we might see another wave of selling if the 10-year yield really fall past the 4.65%. Because remember, just 2 weeks ago, I told you the US Treasury is having a very serious trouble. And I keep on warning that we may see a pullback. And of course, the market really did that. You can see that the market really came down by 1,100 points, which I mentioned back then. I said be very careful. And of course, I did also mention that if this continues to sell right, we may see further selling. And of course, one thing to note of is the US unemployment. You can see that from the CPS household survey, we are quite at the low end since we go back to the time of 2021. That was here itself. And now we are even lower than 2021. So we know that what happened back in 2020 due to the COVID virus, but the thing is this, it recovered. But then again, now we are getting lower. So with all the stock market the high right now, what's happening? Well, we do know that the regional stock market has pulled back quite a little bit, right? So with this happening at the same time, I kind of believe that next year, 2025, the chance of recession is definitely there. So one rising concern is the US 10-year yield. Now, not many people cover this story because this is not an easy thing to cover, but if I make it simple for you. So the thing is this, the US 10-year yield from 4.1%, it has risen up all the way to now 4.629%. Now, the level that I mentioned to be critical is 4.65%. And if it goes past that number, it will definitely shake a lot. So why is that happening? Now, because you must understand that the bond yield goes up because the treasuries, the price goes down. And we all know that this Druckenmiller and a lot of big boys have been shorting the treasuries because they don't believe that the Federal Reserve will cut more rates next year. And they are actually spot on. And of course, if you look at the numbers right now, this is because the continuing claims also is rising and people is concerned. And the hawkishness of the Federal Reserve recently has completed it. So with that, you must understand how does it work with the stock market then. So if the 10-year yields are going up, that means the treasury is coming down. That means that people are not buying the treasuries. And because of that itself, right, people will think, look, if I don't get 4.65% from the stock market next year, example, then it's better to move the funds to the bond market. And then when they do that itself, right, the stock market will take some profit, right? And that's what usually happens. So you look at the 10-year treasury yields with the S&P, right? This is from this Bravo's research, which is previously one of my favorite. And you can see that almost every time when the 10-year yield actually rises, okay, you can see from this chart, whenever it rises, the stock market has an incredible pullback. So it seems to be happening this way since 2020 until now. So I believe that the cycle will just repeat because we're seeing this market have been selling the last few days, right? So if you look at the those who have followed in, congratulations to you. We have shorted somewhere around here. Congratulations. And then, of course, the market went down. And a big haul was on this particular day when the market came down. And the thing is this right now, some people are asking me, Cal, that the KSI indicator is still pointing downwards and your retail is also pointing downwards. Why when the market goes up? That is a thing. Now, we do note, once again, I mentioned to you, it could be a Santa Claus rally, usually happen for a seasonal pet reason. So my view is that be careful because, well, the market may actually pull back. So if this could happen, then you must take note on Monday and Tuesday. So of course, we all know that this is the typical chart whereby people say that, no, this time could be different. but it could be also a bull trap. Now, what's a bull trap? To inform you, a bull trap is when the market is rising, then boys take some profits from the market, and then after that they purposely push the market higher. Now, why do do that? Because they need to let the people believe that the bull market will continue, hence will capture more bull. Usually these are the retail bull, and then when the market really breaks down, the bull trap turning point, which is here, I'm drawing for you right now. This will send fear into the market and then the capitulation effect before we go to the despair. But of course, I don't think we'll go that way. But a pullback, I think, is very, very possible. And trader, you need to be careful on this, all right? So because people keep on telling me that this is different, I think that you must know that it could change, all right? Now, of course, the new high, new low index has shown very clearly that it's pulling back from the top. And again, we all know that when that happens, usually the stock market will take some profit. And of course, based on the NYSE advancing issues percentage on the last 3 sessional year, we can see that we are actually having a pretty low number as compared to the previous. And so all this speaks volume and tells you that we need to be very careful moving to the next 2 days on Monday, Tuesday. So to wrap it up itself, right, there's a few technical points that I want you to take home. And one thing is to note is this, the 100-day moving average. Now we call for a sell right here and we profited from it. Congratulations again. And then when it came down to this very point, I said that there could be a rebound at the 100-day moving average, and it really happened. So now the thing is this, if the market failed to stay up, then the next wave towards to the 100-day moving average is going to be very important. And that will be roughly, let me give you a number, it'll be about 42,000 and about 450 level, okay? So which means that if the Dow Jones come down, we have a closing last Friday of 42,992, so we're about 540 points away. So as long as the Dow Jones stays above 42,450, the market still will be supported. Do hear me out. But if the market fail to stay above 42,450, then there will be some serious selling. And of course, the selling, based on what I'm seeing right now, we can actually see coming down all the way to about 41,500 series, okay? So this will be a level that I'm very comfortable to buy back some short position if the market do continue to do its selling, okay? Something that you must take note. And of course, we try to use the very powerful 5% retracement method. And you can see that every time when the market hit an all-time high, I do a 5% retracement method, and you can see the accuracy is incredible. It's perfect in a way. Every time when it goes there, as long as the market fails to stay below the 5%, it will generate a rebound. But of course, at this junction here itself, the market could actually go back to the high again, or it may pull back to the 5%. So what number again, the 5% level? Let's take a look, okay? The number that we have is 21,036. This is for the NASDAQ, okay? This is for the NASDAQ that came down very strongly and then got itself rebounded from here, 21,036. So for the Dow Jones here, it will be this figure. Okay, now Dow Jones has broke below the 5% level. It was at 45,140 for CFD. It went all the way down, came down all the way. Now, remember, I gave a very important number. I said that based on my indicator, the crazy indicator, 42,342 is a very powerful number, which is based on the KCB. And of course, the market incredibly rebounded right here beautifully. So now the thing is this, the market is now trying its best to stay, and you can see very incredible, the market is staying right exactly above the 5% marker. So which means that 42,883 will be a very important intermediate support. If the market stays on 42,883, we may actually see a market rebounding all the way to the cycle high. You never know. But at the same time, if the 4.65% get breached on the 10-year yield, then once it breaks again the 42,883, we will see most likely it will happen this way. We'll see coming down back to this number here, which I just mentioned, 42,342. Or worse, it may come down to this point here, it's a technical level, 41,885. Okay, then if things get really, really crazy, then of course, breaking 41,885, we may even see a pullback of 10% from the all-time high to 40,626. So all these numbers are on the downside. On the upside itself, to me, a rebound could be all the way back to the all-time high. So all these numbers, please take note, and hopefully you can get some money from the market. Yeah. And with that itself, remember, my KSI indicator show very clearly the boys are still selling. So the initial upside, as I said, using our indicator, we may see the most in this manner now. We may see going back to the MA 30, which is 43,787 for coming Monday. If not, then the pullback all the way down to where it started back then, 42,126 will be the first target that I'm be putting back my getting back my shorts, because we shorted somewhere around here on this Friday. So if the market rebound, that is a high that it will go. If it comes down, 42,126, and of course, based on the current price of 43,000 CFD, that is about nearly 800 points. Okay, so there's a lot of money to make if you actually follow through. So if the boys are selling, the retails are selling, then with the 4.65 coming in very near, I think all this speaks volume for coming Monday, Tuesday trade. All right, so that's why I'm sending this video. Hope you enjoyed this video. This is Cal signing off. Take care and have a great day. Bye-bye.